So okay, when it comes to closing your trades, guys, the most important thing that matters, it is actually your entry. Your entry will also determine where you are going to exit your trade. So it is not just a matter of closing only, or a matter of entering only. So even after entering your trade, what will matter, it is also your exit. And even when you focus on exiting, it will also be determined by where you enter your trade. So we have the most usual thing. For an example, let's say you are risking 1% to make 3%, you see. So the reality is, this is what we speak about. This is what we speak about. But when it comes to the market, sometimes you'll find yourself that you are risking 2% to make, even maybe sometimes to make even 2%, meaning it is 1:1. Sometimes you are risking 2% to make 3, you see, which is meaning this fixed risk reward, it is not always the case. It is not sometimes, or it is not always the case. Why? Because, for an example, when I buy my trade here, let's say I'm buying here, when I buy my trade here, when I no when I buy my trade here, I am expected to put my stop loss down here, as the theory says that you put your stop loss below the previous low. So I buy here, I'm expected to put my stop loss here. But now, let's say now I face another problem. Let's say now I find the market here, because of fearing to miss out, I find myself buying here. And as well, buying here, the book that I read said put your stop loss below this low, meaning somewhere around here. So looking at this distance, putting a stop loss at this amount of distance, you see, at this amount of distance, let's say maybe your account is having like $300, you see. So putting a stop loss at this amount of distance, meaning this is a lot of number of pips. There's a lot of number of pips. Let me check here. It is 38, 14, 38. Up there it is 80. So it is like around 40 pips here between this distance, around 40 pips. So you put your stop loss here. Why? Because you are forced, because of a late entry. So your stop loss is far more than 30 pips, which is a good stop loss should be less than 30 pips. So your stop loss is far more than 30 pips. Why? Because of your entry, you see. So if you enter here, and the next question is, where is your exit now? Because here, this is where you're supposed to close your trade, but you are entering your trade where you are supposed to close it. You see, you are entering your trade where you are supposed to close it. So now you will not have a good take profit. You will not have a good take profit. For an example, you will buy here and you will see the market behaving fine. What are you going to do here? Because of fear, you are going to close your trade. Meaning you have risked these 40 pips to make only this, which is like 15 pips. You see, meaning you were risking, now your risk reward was vice versa. You were risking the 3 to make only maybe 1.5. You see, or you are risking 2 to make 1, meaning now you are risking more than you're going to make, you see. So one can say it doesn't matter because this trade was profitable. At least I got with plus 15 pips. But the problem is, you are going to do this all the time. You are going to do this all the time. Why? Because you will say, what if the trade is going to be profitable? You are going to hope for a luck, which is something that is not good when it comes to trading. It is not good to actually hope for luck. You should make sure that you do everything with genuinity. So what you need to know, guys, for you to take your profits very well, for you to close your trades very well, you need to accept one thing, that if the trade is already gone, I am not going to enter that trade. You see, if the trade it's already gone, I'm not going to enter the trade. For an example, I'm just making an example with this trade. Let's say this uptrend here, maybe you were hoping for a buying opportunity, and you say, okay, let me just wait for the market to give me a discount, and the market gave you discount here, you see, and now you find the market up here. You say, wow, should I really buy this one because I was waiting for a discount and now I'm late? I found the market up there. The real answer is you have already missed this trade. Don't hope that if I buy here, it is still going to go up. You have to wait for the next opportunity. You see, the market is always active Monday to Friday, so you have to teach yourself to wait for the next opportunity. That's why a lot of people were looking maybe some post on Facebook, people making profits from gold, people making profits from Nasdaq, and then a lot of people made losses. Why? Because they entered because they saw that those people who entered before, they made a lot of money. So it doesn't work like that. It doesn't work like that. You need to make sure that you are patient all the time. You wait for all your confidences to be met. If you are using a strategy, for an example, if you are using oscillators, let's say you are going to enter trades through the oscillators and close them through the oscillators, you have to make sure that you follow it carefully. You follow it carefully. Don't find yourself violating it. Let me check a good chart that we can make a live example with. Okay, this one, it had the stop loss. So okay, let me just elaborate here. Let me just elaborate in this chart here. So we have this market here. I think this was my trade from when is it yesterday or early today? But yeah, it just had the stop loss like an hour before. So let me just elaborate here. So you can see here that we have a market which is moving in a range. We have a market which is moving in a range, meaning the market is moving sideways. The market is moving sideways. So if the market is moving sideways, I just want to show you something. Let me check my phone about this trade. Okay, this trade I closed it like somewhere around here. I didn't wait for it to hit my stop loss, so I currently don't have a running trade. Euro card, yeah, euro card, I closed it somewhere around here, and it was minus $7. So looking at this trade here, we have a ranging market, which is a significant resistance and a significant support. So price was in a resistance. And one can ask me, why did you take this trade maybe somewhere down here? Why didn't you take the trade up there? Why didn't you take the trade here? So I just want to make this clear. The reason I took the trade here, it is because I was waiting for better confirmation. So for an example, you can see that here is our high. And if you can see that price reacted significantly, and when it went down here, it began to form another pattern, which is a head and shoulder pattern. If you can look clearly at this part here, which is a head and shoulder pattern, and which permits you to enter when the neck is being broken. You see, so when the market broke here, I entered my sell here, and immediately it went back against me, and it broke this pattern again, meaning this pattern was no longer valid. The pattern that made me to enter the trade was no longer valid. So there was no need for me to stay in the trade. Okay, one person can say, let me wait. What if price is going to respect these highs? But the question is, what made you to enter that trade at the first place? What made you to open that trade? What made me to open that trade? It is not only just that the price is on a resistance, but it is also the fact that there is a significant reversal pattern, which is a head and shoulder. So I entered it because of this pattern. So if this pattern is now broken, meaning I do not have any reason to enter this trade or any reason to stay on this trade. So there is one thing that destroys us as traders. It is doing this thing like I sold here, now price is going against me. let me wait, maybe God is going to save me and the market is going to reverse. That thing, it really destroys us. If the trade is not working against you, just close the trade. And we usually have scenarios whereby, for an example, in my case, I close the trade here, and if the market can turn and go all the way down here, I will have this feeling that what if I didn't close the trade? I would have waited. I would have just depended on my stop loss. But the truth is, this will not happen all the time. This will not happen all the time. That's our weakness as traders. We hope and we have too much belief. We have too much belief. Yet we should be only believing our strategies, not just believing that a miracle is going to happen. So I hope that is making sense. I hope that is making sense. You should make sure that when you enter your trade, you know your exit, and you know where you are going to cut your losses. Just know your exit. There is a moment where I spoke about stop loss, that stop loss and take profit, it is not for exiting our trades. We do not exit because of stop loss and take profit. This thing, they are here to assist us in case our eyes are not in the market. If our eyes are not in the market, then stop loss and take profit, they are going to assist us. But if you have the eyes on the market, for an example, in my case, where I was my network is bad. Okay, sorry about that. So for an example, in my case, I was able to watch this trade and see that my pattern is broken. So there is no need for me to rely on my stop loss, which is here. You see, cutting my trade here, I lose -7, but here my stop loss was going to give me -14. So I saved that percentage of my account. I saved that 1% of my account, because I risk like 2%. So I saved that 1% of my account. So that's how things should go. For an example, let's say now the trade goes on your favor. You put your take profit here. Should you wait for your take profit to take you out? The answer is no. What if the price will reverse, for an example, like here, without reaching this level here? What if price is going to reverse here without reaching this level here? So you should watch price clearly. Price action, it is actually this that I'm telling you: watching price and obeying price, and reacting from what price is telling you, not what numbers are telling you. Because it is easy to say, people will tell you that have a goal, target making 100 pips a day, but what is the price going to tell you? Is the price really going to agree with you making 100 pips a day? Absolutely no. Absolutely no. So you need to understand that days are different when it comes to you as a trader. Days are different. For an example, me yesterday I took about 8 trades, and a lot of them were profitable. It's like one which was not profitable. And today I took about 2 trades in the morning, and both of them were red. So I just decided and said, okay, today I'm not going to trade because the market is not showing me good setups. The market is not showing me clear setups. So I'm not going to bother myself by focusing on trading because there's no clear setup. What matters, it is not the quantity. It is not how many trades you open. What matters, it is how accurate or the quality of the trade. My charts are not loading here. So what matters, it is the quality of the trades, guys, not just the number. Not just opening 7 trades, 15 trades. That thing, it will blow your account. It will blow your account. If you are not if the day is not on your favor, just stop trading for that day and wait for the next day. Stop trading for that day and wait for the next day. You see, there is this other example that I'm going to show you guys. It is was it yesterday? Yeah, it is a trade from yesterday from oil. I bought oil, and here you can look clearly here that when I bought this trade, I didn't put my stop loss here. I didn't put my stop loss here. Although the theory or the books, they tell you to put your stop loss below the recent high, but I didn't put my stop loss here. Why didn't I put my stop loss here? I was covering the fact which I told you in the beginning, that if you are late, you have to accept that you are late, and you have to pay the price of being late. And me, the price of being late, it was to put my stop loss in a very, very tight zone, not even looking for a low, just putting my stop loss just in a very, very tight zone. Why? Because I was having this boldness that, okay, price is going to take off and it will not go all the way down. And I was luckily it didn't go all the way down. So I couldn't put my stop loss here, because putting my stop loss here, I was just going to be risking more than 2% of my account, which is something very wrong. So if you are late in a trade, rather do this that I did in this particular trade. Put your stop loss in a very, very thin, let the gap be thin between your entry and your stop loss. Don't put your stop loss below lows. That's theory, but the reality, it is something else. Here is another opportunity. Let's say you as a trader, you look at this and you say, wow, I see a double top. What if this is the market is going to go down all the way? And I can see even here there is divergence. This high is higher than this one, meaning the indicator is going down and price was making higher highs, meaning there is divergence. What if this is a reversal pattern, this double top here? What if I have to sell here? Now, if you sell here because you are already late, there is no need for you to put your stop loss here or to put your stop loss here. You rather put your stop loss somewhere here, you see, because you are already late, so you have to pay the price. The guys who were early on this, they entered here, and you are entering here, you see. So you have to put your stop loss somewhere here, not up there, because up there it is going to take more than 2% of your account. So that's the most important thing, guys. If you are late, make sure that your stop loss or your take profit is not the same as it was going to be when you are early in a trade. So I hope it is making a lot of sense. So if anyone has a question, you can ask. If you have a question, you can ask. Just to make this more of a meeting than just me speaking. So if you have a question, you can ask a question. So I tend to suffer from fear of missing out on a trade which leads to a loss. Okay, no, it's clear for now. Okay, I think the issue of FOMO, fear to miss out, it is actually, it is a result, sometimes it is a result of having maybe your previous day as a trader, which was something bad. You see, let's say maybe yesterday I didn't make what I wanted to make, or my daily targets. So when I come today, I am looking for every opportunity that I can find. And when I look for every opportunity that I can find, I will find myself selling such trades here, saying, wow, I don't want to miss this downward move, and only to find that I am already late. The price is just going to go up. Sometimes for you to be helped on that one, you just need to accept one thing, that okay, the market is not going anywhere. And for you to be saved from that, you need to increase your watch list. Have a lot of opportunities. But if you have a very big watch list, for an example, like here, I have more than 14 pairs, you see, just to save me of entering trades which are low quality, I have an option. So you also have to add into your watch list. If you are trading only the 7 major currency pairs, it is going to be a problem. Because Currently, as we are speaking right now, all of them, there is no trading opportunity. Even for the entire day, from morning until now, I was watching them. There is none of the major pairs that is showing a good opportunity now. So, okay, I was saying you have to increase your watch list, guys. You have to increase your watch list. Don't only focus on a small number of currency pairs. If you know that you are in a corner of making money, if you know that you are bound to make money, you see, if you know that you depend on trading month and you have to pay rent through money from forex, don't find yourself trading only maybe 7 pairs or only the major currency pairs. Let me start my network. So don't find yourself in that error. Don't find yourself in that error. Make sure that you increase your watch list, and if you increase your watch list, guys, there is one thing that is going to save you. You have to respect correlation. You have to respect correlation. Don't find yourself opening trades that are going to cancel each other. Don't find yourself buying USD, let me say, just say USD JPY, and find yourself selling USD CHF. Don't find yourself doing those stuff, because a lot of people that like opening a lot of trades, they open such trades where they buy this and they sell this. So if you do this, both of these trades, they are just nothing. They only equal to zero. They are going to cancel each other. You are going to lose this one and profit this one. So it is just a useless game. Make sure that if you trade pairs which are completely different, they don't cancel each other. Respect correlation. Make sure that you trade pairs that are not canceling each other. And don't also find yourself trading pairs that goes together. Don't find yourself buying USD CHF and buying USD JPY, because it is like you are doing one thing. So you are just increasing your risk for nothing. If this trade is going to go down, even that one is going to go down. So you'll find yourself losing double. You see, don't do that thing. Make sure that you study your currency pairs and you study your charts. Let me check the next question. Just focus on now. Say it is wrong that I just focus on Nasdaq. Okay, someone is focusing on Nasdaq. It is not wrong, but get what I just spoke about, that if you focus on one pair or on 4 pairs or on 3 pairs, you need to be someone who really is ready to wait. You need to be ready to wait, because as you know, a market moves in waves. A market moves in waves, and it is not all these waves that we buy or we sell. It is not all these waves that we trade. For an example, this uptrend, it moving in impulsive wave, corrective, impulsive, corrective, impulsive. It is not both these waves that we trade. If we are going to trade both of these trade, we are going to be in a lot of danger. But what we trade the impulsives only. We trade the impulsive only. For an example, we buy this trade, this wave, we don't trade this one. We buy this one, we don't trade this one. We buy this one, we don't trade this one. So for an example, let's say you are trading in a higher time frame. It will only take maybe one single day, it will move this wave. Maybe let's say you buy here, you close your profits here, and the next day it completes this impulsive wave, meaning 2 days is still completing one impulsive wave, meaning you only traded one day, and the next day you were not trading because you only trade impulsive, and you cannot buy here because you are already late. So if you are trading one currency pair, you should be ready to wait. You should be ready to wait. If you are not ready to wait, then you should go to lower time frames. If you are trading one pair, go to lower time frames where there are a lot of opportunities, where there are limitless opportunities. How do you deal with your losing trades? There is nothing that I do. I just close them. I just close them red, and yeah, I call it a day. There is nothing I can do with it. I know when I enter a trade, there is one thing that I'm sure about. I am completely sure that that trade is either going to be a loss or a profit. So I accept it. It's part of trading. It's part of trading, but I deal with them by keeping them small. I keep them small all the time. I keep them small. I make sure that I keep them small, which means the double top and the double bottom will not always be effective as expected. Yeah, patterns are not always playing out. Sometimes they give us false signals and they go the opposite way. I suffer for holding trades for a long and the market comes back. Okay, RG, it is not a suffering, that one. Holding trades for a long period of time, it is not weakness, it is not suffering, it is strength. Me, I am happy that you have something that maybe me I don't have, because me, sometimes I don't hold trades as long as I supposed to. But being able to hold your trades for a long period of time, it is a good thing, because you really eat the trade until it is finished. You really eat the wave or the trend until it is finished. So here is a secret tip. For you to benefit from that, you need to trail your stop. You need to use trailing stop. Meaning you need to, when the price move up, take your stop loss up. When the price move up, take your stop loss up. That one is going to save you, because you are not going to lose all your money when the market collapses against you. So trailing your stop is something that is going to save you. I hope it is making sense. I hope it is making sense. It is not a weakness. It is a good thing. It is a weakness only if you will do it on losing trades. Don't do it on losing trade. Losing trades, just close them. Winning trades, don't close them. Put trailing stop, put trailing stop, put trailing stop. For an example, let's say you sell here. Let's say you sell up here. There is no need for you to leave your stop loss here, even if the price is here. There is no need. If you sell here and the price is here, why is your stop loss still up there? Put your stop loss somewhere here, even if when the market collapses against you, you don't lose money. So if you trail your stop, you will never lose money. You'll only decrease your losses, because a lot of people, they lose through this era whereby a trade goes, it becomes green and then it becomes red again. So your blue trades will not turn into red if you trail your stop. Do you wait for a retracement when there is a break? Yeah, retracement is better than actually entering the break immediately. Retracement is more safer, but I will just teach. Okay, let me just break it quickly. I once spoke about breakouts, that a breakout that is effective, it is a breakout one that is initiated by a big candle. For example, a candle like this. Let's say price is breaking out here. A breakout that is stronger, it is a breakout that is initiated by a big candle. The candle that is in the breakout line should be big. Or if you are not good in observing candles, you should observe this volume. Too much volume, it should show you big volume, that okay, this breakout is promising. Then you can sell this breakout immediately, not even waiting for a retest, you see. So if the candle is here is small in the breakout zone, if the volume is a little bit down, you still have to wait for a retest. What is the best time frame for spotting or trading divergence? Okay, I'm going to answer that. We are left with 5 minutes, but I'm going to answer everything. How do you scale in or scale out trades to avoid increasing your risk? Can you do a top-down analysis? Okay, guys, I'm out of time. Okay, but let me answer these questions. I'm left with 4 minutes, so I'm just going to be a ghost and try to do everything in these minutes that are left. Okay, the best time frame for spotting divergence. One thing that you need to know is that when you have an indicator here, make sure that your indicator is also limited. Make sure it is also limited. When I'm talking about limitation, is that don't look the indicator in every time frame. Don't look it in every time frame. It is good to look it in your lower time frame, whereby you are confirming your trades. if you're a day trader, it's good to look at it maybe in the 30 minutes to confirm your trades. And that's where you're going to be looking at things like divergence, things like overbought, things like oversold. So in the lower time frame where you are now confirming your trades. In the high time frame, I told you that we only look for the momentum and the level of the price, that okay, price is going up and price is close in a support. So if it's going up close to a support, we are looking for a buying opportunity. Then you go down to a lower time frame and you look at the oscillator, that okay, wow, my oscillator, it confirmed that it is overbought or oversold. Yes, this is recorded. This is recorded. I'm just going to edit it and post it. Then the next question is that how do you scale out and scale in to increase your trades? Okay, let's make an example about this. Let's say you sell here and the price is here now. The question is, how do you scale in to increase your trade? Okay, scaling in, as you sold here because of this high, you sold here, the next selling opportunity, it is here. Why? Because you have a corrective wave and then a beginning of an impulsive. So you cannot just sell anywhere. You need to sell where there is a next opportunity. Scaling in is actually when your active trade is giving you another opportunity while you are still in the trade. So it is another opportunity while you are in the trade. For an example, let's say you buy this uptrend here and then the market gives you another low, it goes up. You can also buy again here, that's scaling in, and it gives you another low, you buy again here. So you have 3 scaled in trades. All these 2 trades, they rely on this one trade, meaning even if you lose both these trades, you will not lose from your account. You will lose from this trade that you entered first. So scaling in, things that you should avoid even scaling your lot size. If you're using a lot size of 0.05, use it even in the other trade. Rather decrease it than adding it. Don't add it because you say, wow, the market is really moving up, let me just put a 1.0 lot size because the market is moving up. Don't do that. Rather decrease your normal lot size than adding it. Yes, we are left with a minute. So I hope everything was clear, guys. I really need to increase the time that we meet. I really need to do this frequently so that I can see a lot of people, they have a lot of questions and a lot of people are willing to learn. So yeah, I'm just going to tell you when we are doing the next meeting, but I have to really increase everything. So thank you guys for joining. I think I'm going to post this tomorrow morning or tonight, so I just have to cut some parts where the network was not active, and I'm then going to post it on YouTube. So thank you guys for joining. We are going to meet next time. Let's meet on our Telegram channel. Thank you guys so much. Enjoy your trading. Thank you.